Chapter 30. Candlestick Setups. Extreme candlesticks serve as terrific reversal indicators when they form a hammer. Hammers can help you find bottoms and tops in short-term movements. You will see these candlesticks when a stock drops to test new lows but quickly recovers before a candle closes, leaving a large lower wick and small candle body. Meanwhile, the top wick in a hammer setup is very small or completely engulfed in the candlestick as shown below. And then on the left, we can see green candlesticks that's it opens and then closes at a higher price, but its low is very, very low compared to the rest of the body. And on the right side, we see a red candlestick where there's little or no upper shadow because it opens and then it goes very, very low on a long lower shadow, but then it closes near that open price. Left is green, right is red. See Chapter 11. Hammer candles indicate strong reversal potential in markets because of rapid buying and selling at significant psychological price levels. Especially in trending movements, these candles can work off and strengthen support and resistance levels, indicate an impending reverse price movement. By mastering hammer candles and other candlestick setups coming soon, you can identify great trading opportunities once validated by the market. The color of a hammer candle matters little in practice, although green attracts more buyers. You can confirm a hammer reversal once the following candle closes above the hammer candle. Below, you can see the reversal power of a hammer candle after a continued downturn. Then we see a really, really big run up, but then it goes down and it's this hammer candle. Now, if you were a little more conservative, you could wait for the next candle to validate that hammer candle, or just freaking go hard, and there you go on that chart, and it had a huge uptrend after that. Notice the market overtakes the hammer candle once it reverses, proving the hammer setup quickly. The downside on a trade here should be the bottom of the hammer candle. You can limit your risk by waiting for the next few candles to prove the hammer setup. In the large initial run-up, we also see an upside down hammer candle swiftly reverse this stock. Small body with a large top wick and small bottom wick. You can verify the validity of these slightly less consistent inverted hammers by watching the following candle for an immediately shortable downtrend. Here, extreme buying pressure quickly enters the market, pushing it to newfound highs. However, the inverted hammer candle closes much lower than its highs, reflecting a shift in overall market sentiment as other investors take profits. Besides looking at the following candle, you can verify hammer setups with other indicators like stochastics and VWAP, searching for oversold warnings. We'll talk about these indicators and more in chapters 32 and 33. Lastly, watch out for miscellaneous candlestick setups. Although you may not see these particularly often, they can help confirm or deny your sentiments towards a stock's movement. If you are constantly having trouble finding candlestick setups like these, do not worry. Often, you can simply judge a stock with price-based indicators, volume, and overall feel based on market conditions such as level 2 and float. Watch out for these additional patterns as an element in your technical analysis strategy. Then we see our bullish candlestick patterns. These are going to be some patterns you'll see throughout trading. It's a great reference chart here. Definitely none of these are like rock solid, like this is a singular setup, but there are very, very good confirmation tools and extremely strong if you find them in like a monthly setup with large candlesticks. So we start with bullish engulfing, goes down, but then the green candle is huge after it. Tweezer bottom is a big reversal indicator, so you really want to look for validation after that first one. Then the bullish harami is a really interesting one. It's really just a situation by situation setup with that one. Same thing with long lower shadows with the triple candle setup. You're going to see these as they come. It's a good reference here. The bullish counterattack is pretty good. It's a little bit like the bullish piercing, which is another very, very strong one, sort of like the tweezer bottom, where you have a big red downtrend and then a big green uptrend. Another two that you might see are the one white soldier and the Morningstar reversal. Again, these are really just as references. The hammer candle is your strong one. Those bullish piercing ones with the tweezer bottom, those are also going to be seen pretty frequently, but this is a good reference chart. Same thing with these bearish candles. It's pretty much the same as the bullish ones, just a little bit different. You'll see these in the market as you start to practice, you start to trade. It just comes with time, and as long as they come, you're going to have this reference here. You're going to have all your other indicators that we'll talk about soon, and those are really going to guarantee that you find the best possible entry and exit points in a trade, because these are going to be pretty high confliction, top reversal, bottom reversal points in a lot of trades. Anyway, we get bullish engulfing, tweezer top, bearish harami, pretty much the same as the bullish one, just green and red instead of red and green. Long upper shadows are upside down, so that's gonna show you a downward pending move, a little bit of a mix with the hammer candle. an inverted hammer candle. And then the bearish counterattack, you have a big run up, but then a little bit of a downtrend. Sometimes this is a little bit different. It just depends. You can have maybe a wedge setup or a flag setup come off of this setup. So these candles are really going to be on a case-by-case basis. Really looking at those longer time frame ones are going to have a significantly larger impact on your trading and the stock underlying your investment, so that you get the best possible return from that. And then the one black crow is just like a bullish piercing, except upside down. So that's going to indicate downward movement. Big run up, big downtrend in the same time. I know a couple stocks like Boeing had a little bit something like that on their monthly chart. And those monthly candles, there was a really, really big uptrend, and then a really, really, really big downtrend in the immediate month afterwards. And that sort of messed it up. And that would be a pretty solid bearish candle pattern with Boeing, since they had a one black crow, which is a shame. Really is a shame. Just a lot of news came out, bad stuff, and when bad stuff happens, bad news, people sell, people freak. That's just how it works. That's why you diversify. See chapter 35. And then last one is an evening star reversal. This is the opposite of the morning star reversal, looking at going down instead of going up. Usually you'll see the morning star reversal, especially in 9 to noon trades. That one's going to show up a little bit more. Really, though, with the point with those is to watch for that VWAP break, which we'll see very, very soon in a coming chapter. So once you break that VWAP price level, which we'll talk about soon, that's going to be a confirmation sign on both of these that you're really in the right position here, and you can short or go long and make some very, very low risk locked in profits. It's good stuff, guys. Thanks for listening to this chapter.